Welcome back, everyone. So I missed yesterday's video. I do deeply apologize for missing yesterday's video, but let's just recap what happened yesterday and how it led me into today's bias. So yesterday we put in a pre-market low around here. The market liked this 77.5 level because it put it in the pre-market low here, did a little false. It was actually around 6 a.m. or so yesterday. We got our nice little false breakdown of the level later in the day where we came down, recaptured it. It gave the deal that I needed. It gave me more than enough of what I needed. Um, I'll give an example of what my entry was yesterday. I actually don't enter trades on a 15-minute chart. I do like looking at a 15-minute chart, but if you boil down to an hourly chart, you can see that our 77.5 level that we have here yesterday was officially reclaimed at about 2 o'clock. Once it was reclaimed at 2 o'clock, I took my entry, and I always look for 10 points. We got our 10 points here from our entry. It eventually reversed and came back below pre-market and then came back. It chopped around, but long story short, I was always looking for once pre-market low is reclaimed, take our 10 points and move on. I got my 10 points. Now, on to the next session when the pre-market action started, which was here as of last night, yesterday at 6 p.m. We opened up above the pre-market low. And the way I look at it is if the pre-market low holds from the previous day, we're in a bullish context. And funny enough, we opened up above it, came down, tested it to the T, I would say to like one tick, and then rallied immensely off of it. Testing last Friday's low exact, actually, which is pretty insane. And then turned around, sold all the way back off down to a low of 59.45. Kind of interesting where that ended up. I'm not big on Fibonacci's, but I will say that I still think that it was a pretty decent size sell that came right into the 25% mark of this entire high to low move. So from the major low on Tuesday to last Friday's high. So it was a pretty substantial pullback that might keep us in bullish context for now. By the time I'm posting this, we are below that pivot level, which I would I would basically say anywhere between that 77 to 88 level is a magnet, and below it, I'll consider us in a bearish context. Above it, a major squeeze ensues above. So there is no entry here at this moment. The next support down is at 59.58 or so. That's being tested currently because it's a zone of like 59.58 to 59.62. We made a low of 59.60 and already bounced about a good 14 points off of that already in this overnight session. I wouldn't trust that area with a buy, especially tomorrow, as it's being tested over and over and over again. But I will give you two high quality trades I will be looking at for tomorrow. So for tomorrow's action, getting back above that 88 level, this little shelf right here, getting back above this will squeeze price to at least Friday's low and maybe even higher to test even 60, 67. It will be a major squeeze from this level. But if typically markets like to trap before they actually end up making these substantial moves. So we won't blindly just enter anywhere in here. Your first entry that I think you should be looking for is any tests below this 59.45 area. We sold substantially about 80 points from high to low down to this area, and then bounced substantially about 50 points. So this area is pretty important. If we take out this low and close back above it, so what that would look like on a 15-minute chart would be at some point the market comes down tomorrow and it will dip below this level. I would then be looking for a long Currently speaking, we can see that ES is trying to get back above that 77 level. Any flagging below that 77 to 88 level might produce a long above 88 if it does happen, because that's where the major squeeze would ensue once we get above this shelf over here. A fun exercise to try, just a little caveat here that I want to add in. When futures open up in the evenings, I want you to take the opening 15-minute low and map it out. So if you did that, you would have seen it came in around here. I'll map it out for you so you can see this little exercise here. But I do this quite often. So this is the low that we opened up at 15-minute first candle low. The market will test it, do a false breakdown of the level. It doesn't always false breakdown. Sometimes if it closes the candle below and keeps pushing lower, it will keep pushing lower. But you can see here that gave a breakdown, recapture, and then off to the races. And right now the target is pretty much that 15-minute high. Well, in reality, it's probably this high here that we put in at around 7 o'clock. So once this high gets taken out, which is at 59.8225, then the trade is basically over. See, like it's this opening range that happens. You got the low and you have the high, and it's a bullish market. It's in bullish context. You want to take trades that are trap filled, and this was a trap, and you see it reclaimed, and now it's running back to take out this high here. This would have given you substantially more than 10 points. So you don't always have to trade the cash market. Sometimes the overnight action gives you a pretty good and decent entry. And just wanted to add that little caveat here. So opening range high and low, liquidation, spiked above, came back in. Now we test the low, dip below the low, come back in. Now we go back and take out the high. And this might just continuously happen all night long. Or, like I said, if we build a nice little tight flag in this area here, popping above here will squeeze us right back up to Friday's low, and thus potentially this shelf we had up here at the 37.42 area, and so on and so forth. But let's not get ahead of ourselves. Let's just look for what we would look for in our entries for tomorrow. And the entries that I think you should be looking at is any dip below this 45.50 area and reclaims, and any major dips below this Tuesday major low that we put in. If you don't remember, that Tuesday major low ensued this rally we saw today. It was exactly 100 points, and now we're retracing that move. And this could either be the start of the next leg back to retest the bottom of that megaphone, but the full back test is pretty much all the way up here in this zone. If we do get up here in a hurry within the next couple days or so, this is a stone cold short. It should hold on the first test and will probably cause a significant drop. But like I said, right now we're in pretty bullish posturing, but there is no entries available here at the moment. You want to look for entries at good quality zones after a trap has ensued. The trap would be below this 45.50 area and reclaim, and thus ultimately below this 24 area and reclaim. And you can target a move, a substantial move higher. As you know how I trade, I look for 10 points at a time. So either one of these zones, a dip and reclaim, will provide us with our 10-point moves. As you see, I have more than 10-point increments in between these zones. So if you do see any spikes below and reclaims tomorrow, I would take that trade with both hands, because money exchanged hands there. There was a lot of demand in that area. So you will expect to see demand show back up in that area. Take your 10 points. Don't be greedy, as always. Don't be greedy. Take your points and move on for the day. Professionals usually take anywhere from 5 to 6 points in a day. I'm giving you entries that give you 10 or more. Take your 10, take 8 if you want to be conservative, and move on with your day. Trust me, you will become a better trader because of it. There are 250 trading days in the year. You add up what 10 points every day can get you, and you will see that you become way more profitable than someone who swings for the fences trying to catch the multi-leg move. No one can predict the multi-leg move. I'm just giving you what it looks like when you have big moves down, the next. It's like a brother and sister. Big move down, sister squeeze back up. You'll get that squeeze back up, and it's coming really soon. I wouldn't short this market despite what the posturing looks like right now. We are in a sell the rip mode at the moment, but every dip is still being bought, and I think you should treat it that way. Stay tuned for tomorrow's video after we see what happens. Currently, we are getting back above this 77.5 area. I will see it move back up to 88 tonight and probably dip again. Thank you.